By 2026, the cryptocurrency landscape will be radically different, and the strategies that have worked today will be obsolete. And most investors are preparing for the entirely wrong cycle. They don't understand that things are shifting here. After being in the crypto space for numerous bull runs, there's been crypto winters, and seeing the full evolution from pure speculation to what is about to be institutional adoption, I have to say that this year is going to be the most critical year for crypto that's ever taken place. And by the end of this video, you'll understand exactly what the crypto market is going to look like in 2026, which narratives will dominate, how regulation is going to completely reshape everything as we move forward, and most importantly, how to position yourself right now before everyone else. 2026 is going to be the end of the casino era in crypto. It's going to be institutions taking over, okay? The speculation and hype and all the craziness that's ensued in this asset class while it's been the Wild West is going to die off. And right now in late 2025, we're watching the final chapter of where meme coins and all the speculative craziness is finally coming to an end. We've seen DATs meteoric rise, and we've seen those start to taper off here. There's a lot of conjecture, just last week when I was at CoinAlts about that. And the market's maturation is becoming at a much more aggressive rate than I think people really understand. 2026 will be the year this transitions from all of the craziness that it's been over to the institutional side. It'll be completely undeniable. Institutional adoption is already here, and it's now just being distributed into the space. We've seen the Bitcoin ETFs launch in early 2024, and the majority of financial institutions spent 24 and 25 building custodial solutions and compliance frameworks and integrating these systems to be able to scale here for 2026 when the Clarity Act, I think, will pass. So by 2026, you're going to have pension funds, you have sovereign wealth funds, and you're going to have major corporations, and they will be normalizing crypto allocations as a standard asset class and diversification in their treasury management strategy, and using these assets on their balance sheet to be able to transact business. I don't think that we've seen the big turnover of that piece yet here at the end of 25, but I think we're pretty close. So with the market dynamics changing fundamentally, like if you look at it objectively, Bitcoin has been the king, okay? Undisputably, first to market, largest market cap. The majority, well, I mean, not even the majority, there's very few coins that are uncorrelated to Bitcoin's movement at this point because 90% of the market is driven by bots. And we've seen violent 80 to 90% drawdowns that'll be changing as things move forward. And those have been characteristic in previous cycles. So the volatility that we've seen since then, it's just not going to be the case, which is where the opportunity is for a lot of people, right? If you are in volatile markets, there's big moves to the upside and there's big drawdowns. So it's a zero-sum game. There's a lot of people that have won and made a lot of money in crypto, but there's also been a lot of people that have lost a lot of money in crypto by trying to play this volatile asset class. But moving forward, as we get institutional adoption here, retail panic selling into oblivion, it's just not going to be the case. It's going to be cushioned by the institutions stepping in and setting up buy walls, which will end up being price floors for a lot of these assets that are utility-based. If you're working in private equity, you're making investments there, there's often ROFR provisions by a company that will buy back their shares, at a certain price. And they kind of set a price floor for their shares on the secondary market. This will be similar when it comes to these assets on public markets for people to be able to purchase them. And really, in my other videos, I've talked about where I don't know that that's going to be the case at all. I think that there's going to be, walls put up for retail. If you're not an accredited investor or a qualified purchaser or one of these large institutions, it may be very difficult for you to get access to a lot of these assets that are going to have real world utility. And so with regulation looming here at the end of 25 and into early 26, there's a lot of conjecture about the Clarity Act, when it's going to pass, when it's not. Cynthia Loomis said that, she thinks it's going to pass this year in 2026, but since then we've had the government shutdown and a few things have changed. So I'm leaning more toward 2026 when we actually get regulatory clarity for this asset class. And if a few things play out here at the end of 25, that's going to position XRP as the dominant player in the space, which is interesting with everything that's playing out with the lawsuit, which we'll talk about a little bit later if you stick around. So the United States has passed, stablecoin regulation. We have the Genius Act, which is great. Mid 2025, we got that. But some of this stuff really hasn't panned out. We haven't seen a huge adoption of stablecoins. We did, we now have some merchant service providers like PayPal and Stripe and a few others starting to integrate these assets. You've got Zelle also settling international payments through stablecoins. So we're starting to see this roll over here and get the adoptions by the big boys. But in 2026, I think you're going to see a full-scale adoption of stablecoins. But for the rest of the market, I don't know that it's going to be this utopian paradise that everybody's hoping for. I think it may end up being like 99% of crypto goes to zero on the other side of regulations. And I think that's going to be orchestrated through something to do with Tether. I could be wrong about that. I would love to be wrong about that. I want everybody to make a ton of money. But there's a there that doesn't quite click for me. And I think that that's going to be what causes a lot of things to just go away in the future. I think it'll be pragmatic regulation providing clarity while maintaining the innovation in the space. They're trying to walk that line. We've had the Dems come back here at the end of 25 and talk about having counterparty risk, an associated person or a company responsible for DeFi ecosystems, which is really against the whole ethos of that. So, but as things kind of move forward here, I do think that there's going to be full frameworks for this stuff. Mika and a lot of the other regulation that's been put out has been good, but it's also constrictive in certain areas. And I think that if we're able to really figure this out here in the US, we could step into that position as the global leader for this asset class and this technology. But if we let it slip by, even though we have a bipartisan Congress at this point trying to get these things passed, somebody else could take that place. And again, that's a lot of what we'll talk about later in the video here. So as the banks have viewed crypto, for a long time, corporations couldn't even touch crypto due to regulatory uncertainty. How is it going to be taxed? They could change the legal framework, and then, now they're in trouble. And with the SEC the way they were in the previous administration, nobody wanted to touch it. But now that we have a complete flip of that, and the SEC is pro-crypto, effectively providing real guidance around things, we've seen a lot of people move in here. And banks, they've also viewed crypto as too risky from a compliance perspective for a long time. Same thing with insurance companies. There's just been so many people that have stayed out of the space during the last 4 years. But now we're starting to see them dip their toe and start to create products and move in a meaningful way. I think that the institutions are still probably 12 months away here, in November of 2025 from seeing full adoption and all the things that we want as retail or high net worth individuals or family offices from them to be able to support this asset class. And if you do need that stuff right now, if you're looking for somebody to be able to work with you, that's what we do at Digital Ascension Group. We've created all the things necessary to be able to support people that do have a liquidity event in crypto to be able to manage those assets effectively. So if that sounds cool to you, we'd love to work with you. Just go over to digitalfamilyoffice.io and drop us a note and we'll get back to you. So, but back to the deal here. With this change in the industry here in 2026, the professionalism in the industry is going to accelerate dramatically. We're going to have regulations, and it's going to create winners and losers. Like I said, I think 99% of the projects that operate today in the gray area or don't really have utility are probably going to die. And those that do live, they're going to have to adapt to this new paradigm. The teams with anonymous faces and, a lot of the stuff in this space that's been cool up to this point, I think is going to get rectified, and it's going to become much more institutionalized. Privacy coins, I don't know what ends up happening to those. You got Monero, you got Zcash, you got a few other ones. It doesn't look like they've got the adoption at scale that they needed to. We have a good friend over there at Left Zero, and they're shutting that project down. So without the full adoption of those and the institution stepping in a meaningful way, they'll probably persist, but it's going to be a very low volume in comparison to some of the other regulated networks that I think will have, KYC, digital identity, and all the other, pieces that institutions are going to require in order to participate in this space. So we're going to see a split between fully compliant, CeFi platforms, kind of a CeFi 2.0, and truly decentralized products that remain permissionless, but have limited fiat on-ramps and off-ramps. Here in the US, if it's adopted at scale, it's going to have to be compliant with the SEC. It's going to be compliant with, the Stablecoin, the Genius Act, the Clarity Act when that gets passed. And there are going to be stipulations on that are put around it. And I can see it from both ways, right? Like you want to allow people to participate, but you also want to protect people. And you need known parties. You need permission domains. You need permission dexes. You need AMMs with oversight, liquidity pools with oversight and counterparties. So if there's counterparty risk and you're, involved with other people, you need to know who those actors are and be able to hold them responsible if something bad happens. And again, I know that's going to go against the ethos of really a lot of this decentralized technology at scale. And again, I think there's some marriage here. I just think they may operate independently of one another for a period of time in 2026. So the big story that I think a lot of people have just missed out on, or are, people that are watching this channel, you probably are on the same page as me, but there's many people that I think have just missed the boat on XRP. And it is the only thing here in the US with real legal clarity at this point until the Clarity Act is passed. And if there is a crisis, if there's a liquidity crisis in a situation where distributed ledger technology is needed at scale, the institutions are only going to use the regulated option, period. End of story. Okay. I know that there are other things that compete, TPS, technology, there's lots of stuff. Unfortunately, they don't have regulatory clarity as not a security here in the US. And until that happens, these institutions are going to continue to stay away from them. The XRPL is going to emerge as the critical back-end infrastructure for global payments by 2026. I'm going to say here at the end of 25 into early 26, we could potentially even get XRP's designation as a tier 1 asset by the BIS. The settlement of Ripple's legal case with the SEC is the catalyst that opens the door of the floodgates for institutional use of XRP. July 13th, 2023, it was designated that XRP in and of itself is not a security. And a lot of the banks are already looking to implement XRP as through internal settlement mechanism. Between all of the siloed ecosystems that they have, they've trialed a lot of this infrastructure for years. Okay, we Bank of America, and there's a few others that have been a little bit more public about it. But stablecoins at scale, I think, are going to be implemented for back-end settlement inside of these banks and not necessarily be used, JPM coin, you got Cities coin, you got Goldman. They need a seamless way to be able to settle between their own infrastructure and reconcile all of that information real time. Well, what better way to do that than through blockchain technology? It's their own infrastructure. You've got Corda, you've got Ripple, and there's a few others out there that have helped people develop these over the last 5 years. Commonality between those is if they want to transact peer-to-peer or bank-to-bank or bank-to-institution or enterprise, you need a settlement layer. You need a DEX. You need something that they all trust and are interoperable with. And that's what the XRPL provides. And now that it has legal clarity for the asset itself, I think that's where we're headed. I think that's what's going to get adopted. So financial institutions are tokenizing payments between banks using Ripple's technology. I've personally witnessed family offices using XRP and XLM to write off inventory purchases, treating it as a business tool rather than just an investment. And the only way that you're able to do that is if you actually do run a validator on the network and you are using it for a payments infrastructure use case for, your payments company. It's not like you can just, invest in this and hope that you're going to be able to write it off. It's good for tax reasons, right? But again, hopefully here in the US, a lot of this actual infrastructure is going to be tax-free. These protocols that are moving value at scale, you can't just keep racking up, little costs here and there as their settlement between the value of when you sent it and when it lands. Otherwise, you're going to have to reconcile all that at the end of the year. So the easiest way to just completely allow the banks to use and adopt this at scale is to move XLM, XRP, HBAR, a lot of the things that I think are going to be used as these protocols or between these counterparties, just move it to tax-free. Now, I don't know if that's going to be tax-free if it's an investment vehicle versus actually using it, but I think for using it as infrastructure, there may be some write-offs because technically, it is software. So this is the shift people need to understand. XRP, it's not just speculation anymore. Okay, by 2026, XRP is going to be used in cross-border payments and become the standard for the banks looking to avoid slow, expensive SWIFT transfers. I think this is a foregone conclusion. The token itself becomes a bridge currency that facilitates instant liquidity between financial institutions globally. And there needs to be enough liquidity in the asset for that to happen. So, nothing here is financial advice. It's only for entertainment and educational purposes only. If you need a financial advisor that can tell you what to do and where to place your money, you can reach out to us at digitalwealthpartners.net, which is a subsidiary of Digital Ascension Group, where we provide financial advice through certified financial advisors that have licenses to be able to do so to advise you on your crypto. So don't take it from me. Anything I say here are my opinions. They're not the opinions of the firm. But if you do need that help, if you want somebody that is a professional to guide you in this asset class, we would love to do it. So with Ripple and Corda and many others working with large financial institutions, the traditional rails are going to be tokenized. We've heard Larry Fink say that, and many other large bank presidents JP Morgan just the other day, Jamie Dimon came out and stated that as well. It's going to all be tied to international settlement prices. Okay. If there's interbank settlement between two financial institutions, they're going to need that liquidity for that instant transfer. But if the endpoints are international, well, it can go through Ripple or MasterCard or Visa. And if they all also adopt these rails, because it's the only thing with legal clarity, guess what asset settles all those volumes and those transactions? There's a reason that MasterCard and Visa and many other payment providers have been at Ripple Swell, which we'll be attending next week in New York here at the end of 2025. So do your own research. Again, don't have to listen to me. So I think we're about to see this. But again, the liquidity has to be there in XRP for this adoption to take place. And with the ETFs here, right on the precipice of being launched at the end of 2025, I think we're going to see a significant amount of liquidity to move into XRP in a very short period of time in comparison to, what it took for Bitcoin or ETH or some of these other ones. And when that happens, all this is going to turn on in the background. They're going to start using it at scale. And again, we talked about that price floor a little bit earlier. That's what'll set it. Those payment volumes that are consistent across the infrastructure on a daily basis. Swift moves $5 trillion a day. That'll become the minimum volume that's on the network and hold price stability at a much higher value than what we see as far as the speculative market that we have today. So let's talk about stablecoins and what that looks like on the XRPO. We have ROUSD being issued on EVM sidechain. A lot of ROUSD has been issued on Ethereum. You need smart contract capability for stablecoins. You have Soroban smart contracts on Hyperledger. We've seen a little bit of adoption there. You have USDC that's, across Tron. It's across all these other networks to be able to settle at faster and cheaper rates than what you get on Ethereum. Many people use Matic or Polygon to be able to settle stuff also. Tether is the largest stablecoin globally, dominating with, close to $15 billion this year in revenue. I don't know how that one's going to shake out. Like I said before, they are not compliant with U.S. regulations to hold U.S. treasuries for all of their backing. They do hold other assets on their balance sheet, including Bitcoin, that are not tier one assets, right? You need that assurance. You need that no risk backing stablecoins. I think you could do it with gold. Gold is also a tier one asset designated by the BIS since 2019. And so between those two things, obviously the U.S. wants you to use U.S. treasuries and U.S. debt to back these instruments. But I think you're going to see a lot of other countries, Russia is already doing this. You got Japan and many others that I think outside of their own treasuries may allow gold to be part of the backing, and maybe even XRP if it gets that designation as a tier one asset as riskless because of the volumes moving over the network. But I digress. So as banks and institutions move in, they'll be receiving incentives to hold U.S. treasuries to issue these stablecoins. I mean, they're going to be getting the yield off of that while using the stablecoin to be able to settle things within their infrastructure and between other counterparties. So this is going to drive demand for treasuries while opening up the door for tokenization of bank-to-bank settlements. But here's the problem with that. At scale, you're just exacerbating the nostro-vostro accounts. And this is what I hear all the time. People will say, well, we have stablecoins. What do we need a bridge asset for? Well, like I talked about, JPM coin, Bank of America and Citi and Goldman don't want to hold their token. Why would they want to hold their stablecoin? They're going to want to hold their own. They're going to buy enough treasuries that they're going to be getting the yield on that. They don't want to use theirs because they're not getting the yield off the treasuries that JPM coins buy. So you need something that sits in the middle that allows for those things to be transacted, and you wouldn't have to pre-fund accounts at another bank. That's the whole, $27 trillion that's locked up today, is because we have multiple currencies all over the world that are sovereign, issued by governments, that banks have to hold with counterparty banks in order to be able to settle into that jurisdiction. It's going to be a huge unlock when all of that capital comes rushing back to the banks for them to be able to put into other things, generate income with, loan out to people, all the other fun stuff we want them to be doing with that capital instead of just setting it in an account to be able to settle. And it's costly, right? There's opportunity cost for them, and that's why they charge larger amounts for wires. But if they can do that through a bridge currency and settle peer-to-peer instantly for, sending $1 million for less than a penny, they don't have to do that anymore. And they're not going to do it for the stablecoins either. They're not going to exacerbate that problem. They need an intermediary bridge asset that they both trust, that can settle real time at scale. And that's what XRP is going to be used to do. between all these institutions on the back end for their stablecoins and interparty settlement. Okay, so you do have a lot of people that have kind of come into the market or broken out here that have cemented themselves to the retail people as the stablecoin that they're going to use. I think ROUSD probably ends up on the treasury management side, on institutional backends for enterprises and banks. Probably not going to be a retail thing. Okay, there may be a few places where you can get access to it, but it's not going to be the primary market that they're going after. Unlike Tether and Circle, which are massive businesses. Tether hasn't gone public yet. It depends on how things work out for them. They have launched or announced that they are going to launch a U.S. regulated stablecoin, which is USAT. And I do think that that probably sticks around. I think that there's going to be a lot of people that use that. I just don't know about USDT. I mean, the logo looks like an atomic bomb. So if there's foreshadowing, we'll just have to see on that. But back to Circle, USDC has become the prominent stablecoin that most of retail uses to be able to settle transactions. Not trading because there's not enough liquidity or volume on it for large scale trades. Tether still is, by far the largest liquidity provider for exchanges and the largest trade route, to be able to settle large exchanges between counterparties cross border. So until we get more liquidity in XRP, I think Tether is going to continue to sit in that position. But I think there might be a rotation there in the not too distant future. So as these companies have seen, Tether's profitability, there's a lot of people that want to launch stablecoins into the market. There's actually already a lot of stablecoins that have been issued. Tether's not, going to give up that market share that easily. But I think once you see Google and Amazon and all these banks launch stablecoins, Amazon was going to settle, their back-end infrastructure through their own stablecoin, and they hold a bunch of treasuries and earn yield on them. Like, how can it get better than that, right? Riskless returns and being able to settle your own infrastructure and reconcile all that between counterparties, globally. If you're a global company, this is a great tool. So again, that's kind of where XRP steps in. I think that it's going to be what's adopted first. XLM, I think, will come a bit later. Same thing with HBAR, but I do think that they're going to gain some huge traction in 2026, along with, whatever other protocols and assets stick around after we do see the eradication of 99.9% of this asset class when regulations or other scenarios play out in the very near future. So let's dive a little bit deeper on that. Like, what does the altcoin market look like in 2026? I do think that there is going to be a cyclical pattern that continues for a portion of the market. Things that do stay correlated to Bitcoin, okay? Doge, there's some other social tokens that I think will continue to stay that way. But if it has utility and there's other volume on the network and a use case that company that builds things, there could be multiple companies building things on the same protocol. As they get adoption for things, again, price floors are going to be set because there's a consistent volume from that application that's going to decouple that asset's value from Bitcoin and its cyclical pattern. I think that it can still continue to follow what it has in the past. I mean, you got the halving. I will say this time's different though. We've talked about this before on other videos. Bitcoin was at an all-time high before the halving this cycle, which is very unusual. It's never happened in the past. And the advent of the ETFs is what caused that. There was additional institutional liquidity that's poured into Bitcoin over the past 2 years here that's caused it to have less volatility and much more of a meteoric rise than what it would have had, I think, if it had just been up to retail speculation on the asset. So by 2026, I think the market's going to be far less forgiving. The altcoin boom in 2017, you had DeFi summer in 2020, you had NFT mania in 21. Each one of these left graveyards. There's a lot of projects that people bought thinking they were the next big thing, next best thing since sliced bread, and gone. They're worth pennies. Even Bored Ape Yacht Club is, been decimated in comparison to what it used to be, down 90% from where the NFTs were at their high. I think this cyclical pattern, I mean, there's always going to be bubbles and there's always going to be speculation, but a lot of that, I think, is going to go away and be replaced by the institutional adoption of these assets. And if you're in position now, if you own these things now, I think you're going to be way ahead of the people that figured this out next year in 2026. And with that, again, a lot of these tokens, they're going to need to demonstrate clear progress toward meaningful adoption. One of those that I can think of offhand that I just can't place yet is Cardano. Love Charles. I love what he's done over there, but I don't know what the real application for ADA is. There's a lot of people that have put a lot of money into it. I haven't seen any ETFs for it yet. I don't know outside of gaming what applications are actually being built there. Now, Midnight and what he's launching with that security network, I think could play out very interestingly. And I am watching that closely. But as far as Cardano itself, and look, I made money on Cardano in 20 and 21. Bought it at like 9 cents, did very well on it. I just don't know for the long-term price appreciation of the asset, where it's going to be and what it's going to do, because I can't pinpoint a direct use case that's being built on that network. And that's different than Chainlink, right? So Chainlink was actually the first crypto that I ever bought because I could understand what it's being used for. It's an oracle. There is going to be information in the real world that needs to be put on chain for smart contracts to be able to execute. Awesome. There's value in that. And there's value in the data. And it's already deeply embedded in financial infrastructure. It is the enterprise oracle. So if you wanted a safe bet, I don't know that you're going to get a huge ROI on it, but I do think that it'll continue to gradually grow over time. You know, again, none of this is financial advice, but I do think Chainlink is going to be around and be used at scale. CCIP, I don't know about that component of what Chainlink has put out, but the oracle component for sure is definitely going to continue to demand volume, and the token will continue to appreciate in accordance with that. So, you know, there's a lot of different cryptos out there. I wish I could get into all of them that I think are going to be around, but a lot of these altcoins that don't have a specific use case or aren't tackling a specific problem in a unique market or niche, I do think probably just go by the wayside and go to zero, similar to those other bubbles that we've seen in the past. Now, let's get into real world adoption, or RWAs, you know, real world asset tokenization. What's that going to look like in 2026? I think we're going to see a lot of it. Tokenized securities. I think the stock market's going to be tokenized in 26. I think that a lot of the other, and what's funny is a lot of the other more liquid markets are probably what's going to be tokenized first. We've already seen this with treasuries being tokenized. Like, treasuries are super liquid, but they're being tokenized. And a lot of people are looking at real estate, they're looking at private equity, they're looking at a lot of things that are illiquid and wanting them to be tokenized, but there's no market for it. There's no adoption at scale yet. Until you get stablecoins and some of these other markets tokenized and people realize, oh, this is a net benefit, I don't think you're going to see those things tokenized to the level that people want them to be able to actually execute on the vision of tokenization for illiquid asset classes like art or vintage cars or intellectual property and other tangible assets. You know, you had liquid markets and Logan Paul, and they had, you know, they were holding stuff in institutional custody by a third party, and they were fractionalizing that with an NFT, and then people were buying into the trading card or whatever the other collectible was. I think that that's a very interesting use case and probably will continue to proliferate. But until we do get more liquidity in the asset class and people using stablecoins, it's still going to be kind of a niche market there. So what I do see happening a lot more is going to be corporate bond issuance as a token, securities issuance as a token. Again, a lot of these regulated asset classes, the CFTC, the SEC, FINRA, anybody that's under their purview, I think is going to get the green light to be able to tokenize more liquid markets to create the functionality that people want for those. And, you know, I think that cars and real estate and a lot of the other cool stuff, again, private equity that I'm excited about, probably going to take a little bit longer, probably late 27, 28, 29, somewhere in there. I think that those things will become much more liquid as we see the adoption of RWAs and real world tokenization for these assets. And again, you still need something to be able to settle all that on the back end. And, you know, I'll talk about Solana for a second. Digital titles or NFTs, I think, make a lot of sense on Solana, but Solana also needs clarity from the Clarity Act. So in the short term here, payments at scale and backend infrastructure, I think XRP gets it. And then after the Clarity Act, I think you're going to see, you know, some of these chains that do have large adoption and liquidity and developers start to proliferate in other use cases that people do want to see them in. So if you're finding value in this information and want to dive deeper into specific strategies for positioning yourself in the ever-evolving market, you should check out our community in the link below, where we discuss actionable approaches to navigate these changes together. And if you're wondering how you can get the most out of your cryptocurrency and earn from them without having to sell, check out the second link that's also pinned in the comments below. So what does Bitcoin look like in 2026? I think we're going to get a melt up here at the end. I've been wrong about Bitcoin's price before. Just candidly, I thought maybe 75,000 was the top, and obviously I was wrong there. So, your guess is as good as mine, but I'm going to give you my speculation, okay? Because this is about what I think 2026 is going to look like. And again, really blessed to be in different rooms and have conversations with high-level individuals at institutions and family offices. So this is coming from my perspective and a lot of the background that I'm getting here at the end of 25. I do think that Bitcoin could melt up, but I think there's going to be a rotation out of Bitcoin and the Bitcoin dominance is going to fall. And that's what tends to happen at the end of these cyclical patterns that we've had in the past. Through the advent of ETFs, though, I think that rotation is going to happen into other ETFs that are launched for a spot basis on other digital assets, majority of which I think is going to flow into XRP. So Bitcoin continues to melt up, somewhere between 150, 200,000. But the majority of the liquidity that's pouring into the asset class is going to be through these other ETFs. You've got HBAR, you've got Solana, you've got Doge, you've got XRP, and Litecoin, I think, that have all been proposed by different parties up to this point. And again, with the government shutdown, things have been a bit delayed here for the launch of those. But I do think that they are right here on the imminent horizon in early November of 2025 to see market action and a lot of liquidity pour into those assets in particular, which will then proliferate to other assets in the market. So what does that look like for Bitcoin after it tops? If I'm right about Tether and we do see something happen there's been a direct correlation between Bitcoin going up in value and when they've minted Tether. Now, correlation does not equal causation all the time, but this one's pretty interesting. And so I think if there's a huge loss of the amount of Tether that's out there on the available market, and Bitcoin were to falter substantially, we haven't seen a drawdown of 40 or 50% in Bitcoin this cycle. It's been, kind of bought up every single time by the volume on the ETFs. But if we did see a mass liquidation out of Bitcoin during a systemic event like the reverse carry trade unwinding, I think you could see Bitcoin fall all the way back to $20,000, either probably late 2025 or very early 2026 is my guess on this. Again, just a guy on the internet, take it with a grain of salt. You can call me crazy. Let me know in the comments below what you think Bitcoin's going to look like in 2026. But there are some long-term implications for Bitcoin that I think will keep it around, potentially as digital gold. I just think that the price is a little bit overvalued and inflated for what the asset really is. If you look at gold, we're here right around $4,000 at the end of 2025. I think Bitcoin could be a similar price over the long term. I know a lot of people aren't going to want to hear that. We have clients that hold large amounts of Bitcoin, like a lot of Bitcoin. They differ on opinion, they have conviction, and it's worked out really well for them up to this point. So again, take all of this with a grain of salt. The energy component of Bitcoin, I think, is going to persist because there's huge applications for the ability to toggle the amount of energy use on and off the grid from these Bitcoin miners. And we've seen large scale implementation of that infrastructure. For it to just go away doesn't make a ton of sense, but it could be reapplied to something else. It'd be very difficult to do now that they have the ASICs put into these miners and they're etched to be able to solve, the math problem faster and be able to, get the Bitcoin off of the blocks. So I don't know that there's a huge application outside of what they're already doing and verifying transactions on the Bitcoin network. But I do think some of this infrastructure could be rehypothecated to something else. And I do think that you're going to see a transition over time. I mean, you got Eric Trump, you have a lot of people involved in American Bitcoin. It's become a very large industry, especially here in the US, and I think globally as well. There's a ton of infrastructure, like I stated before, that's been built out. So the energy component of Bitcoin, I think, is really relevant to where we're headed as a society with data centers and, other types of energy being brought online. I don't know what all that looks like. That's not my game. That's not my expertise. You're probably able to follow some people on the Bitcoin side that have much higher knowledge than I do in that area. But on the price action of Bitcoin, I'm pretty well convinced that I'm right on this. So, digital gold, I think, on the other side of actual legislation here, the tulip bubble will pop, and then we'll see a real valuation for Bitcoin that could be sustained. If it did drop, when it does drop back to 20,000, That's lower than the cost of the energy it is to produce a Bitcoin at this point. So energy price is going to have to come down substantially. But again, with the advent of these other technologies that are able to produce energy at scale, there may be somewhere where it stabilizes in there and does actually become a hedge against fiat currencies. The other piece of this, I do think that's going to be relevant to the conversation for Bitcoin. Governments are going to shore their currencies up. They are going to back the treasuries with gold. We've had Judy Sheldon talk about the U.S. gold-backed treasury. It's going to be a 50-year bond that's issued on the 250th anniversary of the United States here next year in 2026 and will be redeemable in 50 years. I think other countries are going to do the same thing. We've already seen Russia implement a gold backing to stabilize their currency. People have become very aware of the inflation and that their wealth is being stolen from them if they are keeping it in these currencies. And so if that continues to roll like it has been, people will lose faith in currencies and move away. They're going to have to shore up the faith in these currencies globally. And all these sovereign currencies that are issued, I think will be backed with gold, oil, and again, potentially XRP if it gets the designation as a tier 1 asset. And then gold doesn't have to be anywhere near the price that a lot of people like Jim Rickards and other very intelligent people like, Andy Schekman and Peter Schiff. I mean, they're doing the math. They got the math right. The problem is there's more XRP that I think is going to be involved with that transition than just the gold that's available on the planet. And if they throw oil in there too, there's certain countries that don't have any gold reserves, like Canada. Well, what are they going to do? There has to be some other additional options for them to be able to make sure that their currency is secure and safe and usable and trusted by their people and people globally. So that's my thesis. We'll see what happens. But in that circumstance, it becomes a lot less attractive to own Bitcoin. You would just, save your money like you used to prior to 1971 when there was stability in our currency. And that would be the same for other currencies as well. And you wouldn't have this narrative that's caused this speculative bubble for the meteoric rise in some of these digital assets. They're actually going to have to be backed and used in some capacity inside of protocols and infrastructure on the back end for institutional settlement or other applications where those will then become the leaders in the asset class. And I do think that Bitcoin falls from number 1. I think that XRP will be the largest market cap crypto probably for the next 100 years, maybe even further along than that. Just depends on how things play out. And again, I know the comments are going to go wild. I know people are going to call me crazy, and that's okay. I'm good with that. But that is my thesis, and I'm going to stick to it. And I do think it's going to become very apparent here in 2026. So let's get back to the fun stuff that a lot of people want to discuss about earning returns on your crypto. So there's going to be, a lot of these cryptos that just go away, that are removed, but DeFi is here to stay. We know that DeFi and CeFi are going to blend here in 2026. DeFi in 2026 is going to look very different than the Wild West in 2020 and 2021. The yields that once seemed like free money that were normalized back then, 20% stablecoin yields on UST that attracted billions into, an unsustainable situation where everybody lost a bunch of money. They're not going to allow for that. The reflections that they've taken over the last couple years and then modified for, institutional DeFi, I think are become more prevalent and understood here in 26 with the adoption of it. So this reflects the actual economy rather than the unsustainable incentive mechanisms that were issued back in 2020 and 2021. The 20% stablecoin yields that attracted billions settle into more sustainable single digits here in 2026. If you're thinking that you're going to get rich quick off of this stuff, it's probably a Ponzi scheme and you probably want to stay away from it. Anybody posting double-digit yields, unless you really understand how they're doing it, probably is taking too much risk and will crash and burn eventually. So I think that we're going to see, sustainable DeFi yields. Solana staking's at 6%. You've got some other ones closer to 8%. I think that that's reasonable. And even XDC, if you run a Masternode, you're getting 10%, and they're going to continue to put the supply on the market to continue to be able to scale the network. So somewhere between 6 and 12% in DeFi applications. If there's some looping and other crazy stuff involved with extra leverage, you can get more, but I would stay away from it personally. And again, we'll be looking at all of that at Digital Wealth Partners and implementing that with our clients and advising them on, what's the best options and which rewards are worth the risk. So as asset managers use DeFi and efficient portfolio rebalancing, the transparency and composability of DeFi protocols are their last advantage over traditional finance. And I wouldn't say that it's a last advantage. I would say that it's a huge advantage, because reconciling all this stuff at scale, we have hundreds of LPs in our fund. It becomes very difficult. So even if headline yields aren't exciting, you do have private liquidity settlement networks that institutions were afraid to use before because, there was no regulatory clarity to implement it. But now we have tokenized deposits and bank-to-bank settlement. So the next iteration on top of that is obviously going to be, these DeFi applications. And this creates an entirely new revenue stream for financial institutions. And wealth managers finally have products and services that they can offer to generate value for their clients. And that's exactly what we're doing at Digital Wealth Partners. So everything's value exchange at the end of the day, right? It's transactions. And if they're all clipping a small piece of that, that's how the institutions make their money. I know that people don't want an intermediary sitting in between all of this stuff. And I think over the next 10 or 20 years, they may be disintermediated, and there may be, public DeFi networks and things that remove these counterparties in these situations. But you got to get in where you fit in and then change it from the inside out. It can't be in opposition like we've been up to this point with a lot of this stuff. So now that banks have the skin in the game and they can generate revenue, you're going to see huge moves forward in adoption for DeFi applications in an institutional setting here in 2026. And as XRP gets integrated into DeFi protocols as the preferred bridge asset, well, again, when someone wants to move USDC from Ethereum to Solana and arbitrage yield on those opportunities, they're going to need something in the middle. There's actually another application called Omni that does this well, with the gentleman that helped build part of the XRPL early on that actually put that together. And I think he's on our channel as well if you want to go check that out. So, now that we have these side chains on the XRPL, you're going to see a lot of adoption there. But I do think that we need some of the amendments to kind of finalize to be passed to see full-scale adoption of DeFi on the XRPL. You need, a couple amendments, 64, 65, and 66 to get voted on and passed. And I do think that those are going to become, up for vote here at the end of 2025 and be passed, hopefully by early 26. That's pseudo accounts, that's liquidity pools, that's borrow lend, all the cool stuff and the sexy stuff that people want is coming to the XRPL. And maybe you might even see the Hook sidechain be moved to the mainnet, which would give the XRPL similar functionality to Hyperledger with the Soroban smart contracts. And again, if I was a betting man, that's where my money would be. So let's get into what this is going to look like for geopolitical power shifts and the adoption of these assets here in 2026 as well. You have huge dynamic shifts in power. The US has been the global reserve currency for the last almost 100 years. Since 1944 with Bretton Woods, we saw, them propose, John Maynard Keynes proposed the Bancor coin and maybe the IMF sitting in the middle. But because we had the most gold and we were the largest creditor nation at the time, we were able to convince everybody else to just peg gold to the US dollar and then, move the US dollar into that position as the global reserve currency. And then, we've had Griffin's dilemma play out. It's exactly what they said would happen. We've hollowed out our infrastructure. We've offshored all the manufacturing. We've exported all of our inflation. And now we find ourselves in a position to every other current country that has had that dominant currency for an extended period of time over the last 500 years. At this point, we're not going to have China or Russia or a single counterparty that ends up being the global reserve currency. We need a level playing field. We need some way that people can transact at scale and trust and not have sanctions imposed upon them, or one nation that basically rules all the other nations. And so I do think that the IMF will become the lender of last resort. I think that John Maynard Keynes' Bancor coin with the ESDR is much more feasible today than it was back in 1944. And we are going to see the adoption of that framework moving forward, which will allow, a basket of currencies based on their GDP to kind of float there in the ESDR. And you have 7 of those currently, with China also in the mix here most recently. So, you have the G7 nations. That's where that comes from. It's those 7 nations with the largest GDP that come together and help put together global policy. We've seen a lot more eyes on that since 2020. You also have the G20. There's top 20 nations in the world. And with these regulatory frameworks across all these separate jurisdictions, the adoption of this infrastructure, again, I do think is going to surmount the US dollar as being the global reserve currency. And I do think that XRP is likely going to sit as the exchange rate peg or the bridge currency for the world. If you Google global bridge currency, guess what comes up? XRP. So it'll sit as the intermediary. I don't know if it is the ESDR like a lot of people talk about. I think it's more reflective of what the IMF talked about in their white paper back in 2014 about the exchange rate peg, where XRP is their acronym for that. And right after that, you happen to see, Ripple rebrand Ripples, which what XRP was at the time, to XRP. Coincidence? I guess we'll find out. So with all of this culminating, you got the European Union's MiCA regulations, along with many others, like I stated before, coming together, and it's going to create a clear playbook for the regions to study and adapt to this technology and framework and play nice. I think a lot of this has actually been used to prevent World War III from happening. If we hadn't found a solution that was amenable to everybody, Russia and China and the BRICS nations, there's a large rift that people have become extremely aware of. If you're in this asset class and understand this space, there's a lot of geopolitical friction. You've seen Trump with the tariffs as a tool to be able to navigate that. You can agree with it or not. I'm not here to debate those things. I'm just saying it's been a tool that he has used to navigate some of these conversations with these counterparties and try to keep America on top, because the petrodollar is no longer the reason for people to continue to use the US dollar as the primary currency, right? Before, you had to buy the dollar in order to get energy. After 1971, we removed the gold backing. In 1974, we went over to the Middle East and we said, hey, we will use the power of our military to protect you guys. And now they're starting to sell oil to other countries in other currencies outside of the US dollar. And we've been removed in that capacity. So the only way that we continue to remain, significant and maintain the US dollar supremacy in some capability is stablecoins, which we've now got across the line. And if, it's an American-based company like Ripple, or Corda that ends up being who's building out the majority of the infrastructure for people to play at a global scale for, what things are going to look like. And if XRP is the de facto currency, the escrow that Ripple has could become a big piece of what allows certain people to continue to maintain dominance in that system. Now, I've had the blessing of traveling to the UAE. I've been to Dubai a couple times. They're coming up. You got Singapore. There's a lot of large players that have moved into the space. Hong Kong, alongside Singapore, has huge crypto capital markets there in Asia. And with that, I think you are going to continue to see a tug of war for what the crypto capital of the world is going to be. If I was a betting person, and I guess I am, I'm low risk, but I will take a bet if I think I'm going to win. I think Dallas is going to surprise people, and again, I'm biased. I live here in Dallas, have my whole life. But as over the next 3 to 5 years, and maybe even starting in 2026 with the Texas Stock Exchange, a transition from New York as the financial capital for the US here to Dallas. And over the next 10 years, I think that it's going to become much more prominent in that position, alongside some of these other key hubs, like I mentioned before, in other countries as they're continuing to innovate and adopt this technology at scale. So, again, kind of going back to the premise of the global geographical power shifts that are taking place. Once this is implemented and we do go back to gold and oil and potentially XRP backing things, I think that that's going to move into a peacetime. If you've ever read The Fourth Turning, geopolitical events kind of also align with currency shifts. And we are absolutely in the middle of a fourth turning here. And those tend to coincide with large wars and depressions and things that are not so great for society for a period of time. And if we can land the soft landing here, as the Fed talks about, and do this in, I don't want to say an orchestrated way, but a unified way across the world, I do think that a lot of those frictions and issues that could have culminated to much more catastrophic or negative events will end up being a positive outcome for everybody. And I'm not going to say it's a perfect world and it's a utopia. It'll be somewhere in the middle of the bell curve. There's still going to be, manipulation of this stuff with CBDCs in certain jurisdictions, China being a communist country. These things can be used in a negative way, but I think it'll be aligned with whatever country's culture is, and their principles and values will be how these digital assets are used and implemented. So I know people are scared about that, but money moves where it's treated best. And as things kind of change here in the dynamic shift, I think the US is still going to be in a good spot. So if you made it this far, you're clearly serious about understanding where crypto's headed rather than just chasing the next pump. The landscape in 2026 will reward those that are prepared strategically rather than those that are following hype cycles. And positioning yourself properly over the next year requires understanding not just about the technology, but the regulatory trends, the institutional behavior, and the genuine use cases being developed and used at scale here in 2026. So hopefully you have heard, I've mentioned a couple different digital assets here that I think are going to do pretty well in 2026. And there are many more. I think that there's probably going to be somewhere between 70 and 100 projects that end up sticking around. Similar to the internet, when that bubble popped, there was like 60 plus companies that ended up surviving that and thriving as the internet continued to mature. I think we're going to be in the same range here for digital assets. There are going to be specific protocols that get implemented at scale for unique use cases and across multiple jurisdictions to solve huge multi-trillion-dollar problems. And then there's going to be ones that are unique niche applications that work really well that are interoperable with the rest. And if you understand what those are, the total addressable market, the team, the background of the people involved, and what actual problems are being solved by the technology, I think you can position yourself extremely well for these assets. So, and if you want to learn more about that, I've created a community where you can go beyond the surface level of predictions and discuss specific strategies for navigating this transition. We analyze emerging protocols, we track regulatory developments, and we share research on which narratives are gaining real traction versus the ones that are just noise out there. So if you want to continue this conversation and prepare rather than passively watch as the markets evolve, that's where you'll find deeper insights and a group of people taking all of this very seriously. And you can go, check it out in the comments below. So with the crypto market of 2026 coming faster than a lot of people anticipate here at the end of the year, I don't think it's going to look anything like what most people expect. It won't be this libertarian utopia that early adopters envisioned, but it also won't be the collapse of this scam and the critics predict, okay? It's going to be somewhere in the middle, and it's going to be interesting and a genuine financial infrastructure that coexists with traditional systems, offering alternatives and innovation while facing real constraints and those trade-offs that are going to be juxtaposed. The opportunities will be there, but they'll require more sophistication and patience than previous cycles, okay? So those that have been invested in XRP, you've been patient. Many people have been here for, 5, 6, 7 years, 8 years in some circumstances. A lot of people are just now finding it now, and we're happy to have you here. But just know, if you haven't cultivated the skills, values, and beliefs that you need to be successful, money leaves just as fast as it comes most of the time. So again, if you want to be part of a community that's taking that seriously, we would love to have you. And understanding these changes right now before they become obvious is how you position yourself to benefit from the next phase rather than just watching it happen to you. A lot of people see opportunities and they don't take their shot. I'm telling you, if you see an opportunity, you should take your shot. The future is being built right now, and let's make sure that you are ready for it. Thank you for watching to the end. Please like, subscribe, and we'll see you guys on the next one.